Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Sergey Nazarov, co-founder of Chainlink. He joins me to discuss the convergence of capital markets in the blockchain space in 2024. Some background on Chainlink: it's the industry standard decentralized computing platform that has enabled over $9 trillion in transaction value since the start of 2022. Chainlink powers verifiable applications and high integrity markets for banking, DeFi, global trade, gaming, and other major sectors by providing financial institutions, startups, and developers worldwide with access to real-world data, off-chain computation, and secure cross-chain interoperability across any blockchain. Sergey, as always, it's great to see you. Welcome back to Trade Talks.
Thank you for having me. Great to be here.
All right, you got it. What's your outlook for how capital markets will converge with the blockchain industry in the next year?
I think next year will be a very important year for how capital markets use blockchain infrastructure for a few reasons. The first one is that they now have dedicated digital asset teams. I know certain banks and asset managers, they have over 100 people in those digital asset teams, and they have a mandate and a budget. So there's a lot of people now pushing for outcomes within banks to see their digital asset kind of people investment and technical investment go to the next level. And this year, this coming year is the year where I feel that a lot of those teams will be doing things in both pilot and moving towards production. The other thing is that the clients continue to make these requests of banks and asset managers, and there's demand from their clients, which is what we said before would be the main driver. That main driver has now essentially formed into dedicated teams. Those dedicated teams are now not only servicing the demand of existing clients, but they're trying to increase the amount of clients interested in digital assets. So I think this coming year is the year where you really see this virtuous cycle take hold of people starting to do on-chain transactions as banks. The pilot version will be cross-chain transactions, and the production version will be transactions within the bank itself for various cash management things. And then I think that'll create a very good foundation for 2025. Where we will see larger volumes in production. At least that's my expectation.
So where do you think the biggest area of growth is for the blockchain industry in the next year? In other words, how will DeFi continue to grow in the coming year?
I think DeFi is a more consumer-oriented version of what the blockchain industry has to offer. And I think it'll become increasingly usable, and it'll have very good returns and yields and various things that attract consumers as they've been attracted in the past. So I think there'll be some kind of crypto boom in the next coming years that'll kind of float DeFi into a more and more exciting place to put your capital as a hedge fund or as a consumer or any number of other kind of smaller groups. I think at the same time, the big banks, the top tier banks, the top tier asset management firms will be doing their own version of the blockchain world. They will be generating their own assets like RWAs and others, and they'll be transacting among themselves. So in this coming year, I think we'll still see this kind of separation between DeFi and the banking sector. But then in the coming year, 25 and 26, I think we'll start to see DeFi and TradFi converge. And I do firmly believe that banks, asset managers, and TradFi in general are the largest net customer of all DeFi protocols. We just haven't reached that place because they can't efficiently transact with each other, either on a legal basis or a technical basis. And both of those problems are being solved. So the legal clarity is coming. And on a technical basis, you have some of the things that we built, like CCIP, which is now being used in Web3 and in banking. And if both Web3 uses CCIP to connect with each other and banks use Web3 CCIP to connect their DLT solutions, then you can be on a single standard where banks and Web3 applications can interact with each other. So that's kind of the foundation we've started setting up this year with CCIP, and we're going to keep setting up next year. Then I expect to hopefully have some very real volume-based results in the following year, 2025. At least that's the idea, that's the plan.
So with Chainlink more specifically, what are your main areas of focus going into the new year?
So this year, Chainlink has really evolved into a platform. Chainlink historically was mainly about data, delivering data to DeFi. And that's what we did for a few years at the beginning of what the network was about. Since then, the Chainlink network has expanded beyond data into computation and into cross-chain connectivity. So if you add up the ability to provide data, computation, and connectivity, you really have the basic building blocks to build any advanced application on any blockchain. So the thing that we're focused on in the coming year with the Chainlink network is how does it become a platform that serves greater and greater pieces of an application? So how can there be more advanced applications? how can a greater share of what an application does be on a Chainlink Oracle network and therefore make it more advanced and more useful and more scalable and more connected to more valuable systems and services. The other big category beyond being a platform is capital markets. So the ability for Chainlink to be a standard not only in the Web3 world, but also in the capital markets, banking, asset management, financial market infrastructure world, where I feel as a cross-chain standard and as a set of general standards for data and compute, it has a very big lead. So I think that the real goal is to have Chainlink as the standard for Web3 applications on public chains, Chainlink as the standard for capital market applications on banks and asset managers, so that eventually when banks and asset managers begin to transact with Web3 applications on public chains, they have the same method for determining settlement price. They have the same method for connecting with each other. They have the same computational model for defining the security of their smart contracts, so they can trust each other's smart contracts. And what this does is it can create an internet of contracts. So it can create a single global internet of various blockchain networks and Oracle networks and smart contracts where banks, asset managers, FMIs, Web3, all of it is just one big internet, like we have a big internet for information. And this will be a big internet for value, an internet of contracts, which is really where we're going in the long term and what we're setting up the foundation for by this platform approach and this capital markets approach.
And finally, Sergey, if Bitcoin ETFs get approved next year, what do you think is the next catalyst for the blockchain industry?
I think if Bitcoin ETFs get approved, it's really just the beginning, because Bitcoin is just first of all, it's just one asset. And so then there will be other ETFs. But I think what this will make very clear to people is the immense amount of value that is in the current global financial system, of which only a very small fraction is now in the crypto industry. And this is a long time story and idea in the crypto industry that because the technology has various superior properties, a greater share of the global financial system will eventually end up on a blockchain in some form, in a private chain, in a public chain, in whatever set of technologies. So I think what the Bitcoin ETF will show is the sheer volume, the sheer size of the global financial system relative to the crypto industry, and how that sheer volume, once it touches the crypto industry more, how it can impact it. And I think everyone will start to realize the same thing that we've been thinking about for some time, and that is that banks, asset manager, global financial infrastructures have the greatest amount of value in the world, and blockchains and Oracle networks and smart contracts have the best technology for creating transactions among peers and counterparties in the world. And when these two things come together, our industry can go from a kind of interesting industry for a few early adopters to the way that the global financial system works properly, both to the benefit of its users and to the benefit of society in general, so that it's not just some users benefit and society suffers because of crashes or whatever. Everyone can benefit because the technology necessitates a certain level of transparency and a certain level of security and other things that the current system doesn't. So I think we're going towards a world where the Bitcoin ETF will kick off this realization. But once people realize how much potential and how much power there is between the interaction of capital markets with blockchain technology, public chain technology, the public kind of user base, then we'll see, in my opinion, a large acceleration, initially with more ETFs, and then eventually with more and more bespoke blockchain-based products. Initially, I think those products will take the form of what are called RWAs, real-world assets, but then they will evolve very far beyond that to be things like bank-grade DeFi, regulated DeFi. There'll be a wave of DeFi 2.0 in the public chains, and the quality of the applications will just improve. And that's really our goal, to create the infrastructure that can allow those applications to emerge, whether it's as DeFi 2.0 or whether it's as bank-based smart contracts, and to eventually have all of those applications, all of those smart contracts interacting with each other in a single internet of contracts, connected together by CCIP, powered by reliable, verifiable data, and computed around in a way where everyone can trust the smart contracts to hold their value and interact with their value.
All right, Sergey, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq.
Thank you. My pleasure.